Kejriwal, MD and CEO of KEC International, joins us now to talk more about numbers. The stock is at day's high. KEC International came out with numbers. The top line growth was very strong. Margins, some amount of pressure. Mr. Kejriwal, what went by this quarter, and is it just temporary pressure on margins because commodity prices have actually come down in the last couple of months, and you are actually focusing on business growth? Margins can follow in the next quarters. What's the strategy?
Yeah, I think you have put the strategy right, Ajay. What has happened is that if you look at our growth, 29% for the quarter, 26% for the year, and our yearly turnover has gone to 17,000 and which is the highest ever. And as far as margins are concerned, what we had said is that our, I'll say that the lowest level we got was at 4.4% in Q2. And then we had said that we'll keep on increasing the margin. So we are now at 5.1. So it's in line with our target saying that we need to increase the margin. And we have been talking about it going forward also improving that way. So I think with commodity prices stabilizing, I think we see that the challenges to margins have come down significantly.
Okay. So, it's not only that. Of course, you are one of the leading companies in your space. But, Mr. Kejriwal, we have observed that a lot of time leaders in lean growth period focus on growth. While they manage growth, they sacrifice margins and kill competition. Once things go back to normal, then they start charging higher and margins revert to mean while they have bigger market share and much higher growth. Does this apply to your industry as well?
So I do not know about killing competition, etc. But generally, If you look at our last 15 years growth, the way it has happened, it's somewhat similar to what you're saying. That, like from 2015, 2020, we grew virtually zero. We are the same levels. But then our margins went up from 6% to 10%. Last 5 years, we have been growing a lot. Margins have been. So I think incremental growth for some time comes at a little bit of a cost to margins. But once you have reached a particular level and then stabilize, then you are able to revert back to your higher levels of margin. And I think that's what we will see happening in our case also.
Right, Mr. Kejriwal, this is Vinny joining in the conversation as well. I also want to touch upon one point in terms of your outlook for the railway side. How do you see that, considering that there is increasing competition coming there due to the entry of road EPC players? So what is the outlook that we're seeing in this specific side? Are you seeing the orders coming in equally as we were seeing before? What is the competition scenario there?
So, Vinny, last year our order intake in railways was around 2,900 crores, which was I think 30 or 40% higher than the previous year. But it was still lower than our turnover of 3,700 crores. So clearly we were disappointed with one is the tender pipeline, and second, obviously, as you rightly said, competition. But that competition is restricted only to when we talk about new lines and civil jobs. In railways, there are enough other jobs which are there, like electrification is there, signaling is there. Now with Vande Bharat being under focus, the entire speed upgradation has to be done for signaling, for OHE. So there's a lot of work which is going to come out in railways, and we are very hopeful that this year onwards we should start seeing a much better tender pipeline. The competition in these sectors is much lower. If you look at signaling and if you look at communication and if you look at all of them, you have 3 players, 4 players. If you go to civil test, then there are 10 players, 12 players. So I think we do hope that FY24 we'll see a much more better order intake in railways. We are already L1 in a few orders in railways in FY24.
Okay, so railways, you're hoping for better orders, but is there any case that you could talk about in terms of where we are seeing a bit of a slowdown in other segments as well, or in terms of orders, or any worries coming in from clients in terms of conversations that you're having that you may see a bit of a slowdown in terms of order intake going forward?
So I think the only place where I can see some slowdown happening is on the industrial piece in our civil business. Our civil business has got various segments. So data centers is doing well, public space, water is doing well. But on the industrial piece, which we thought will grow much more, we are not seeing too many inquiries, which is a bit surprising. I think that's also linked to the capex cycle, which we are seeing in the private sector. I think that's one area where we are slightly apprehensive about how much we can grow. Only so that's one specific segment in the civil.
All right, Mr. Kejriwal, thank you very much for joining us, and good luck for the momentum and, of course, margins coming back as well as desired in the coming quarters.